Hey guys, hello and welcome to Moneycontrol. I'm Manisha Gupta and we are putting focus and limelight on crude oil prices today. For the last 2 weeks, we've seen constant gains on this one. The latest trigger clearly comes in from Russia saying that 5 to 7% of the production can be cut in the first quarter of 2023. This is in retaliation to the G7 price caps that we have seen come in on Russia exports there. Apart from that, the Russian Baltic exports also have declined by nearly 20% for the month of December on an year-on-year basis. Large U.S. refineries in Texas and North Dakota are shut because of the winter there. The storm Elliott also has led to freezing of oil and gas pipes, and that has been adding premium to prices. So we are back around $84 per barrel for the Brent prices there, and the gasoline and the heating oil, diesel prices have continued to run up as well. Friday was nearly 5% of a jump, and today as well, we are looking at stronger gains even as it is holiday and the volumes are lower. The participation clearly absent from the international markets, but it is on the stronger side that we are looking at the crude oil prices trading within. If you look at 2022 and a rewind of that, we saw crude oil prices at 139 on the higher side for Brent, and then came a decline, and we saw a low of 75. Currently, we are trading at $84 a barrel. So it has been a very volatile move that we've seen in case of crude oil prices. For the year, we are closing nearly 11% of strength or gains for the Brent prices. WTI is up nearly 6% as well. Take a look at the natural gas prices, by the way, because the US gas prices are trading 28% higher for this year. That is because even as US is producing a lot of natural gas, the exports are at record highs as well. And currently, because of the supply disruption, because of the cold, we are looking at that premium staying into the prices. The European Union gas prices have come off their highs. That is because Europe, as of now, is holding nearly 93% of its total capacity of gas, and it is ready for winter. And we are expecting a milder January in sense of winter demand. That is what has put pressure on those prices. Heating oil is up 40% this year. Good gains continuing for gasoline. That one is up nearly 8% for this year. But a clear cut outperformance comes in from coal. That one is up 138% for 2022. There is underinvestment in coal. A lot of demand came in for coal because electricity got expensive. So coal could be your one of the gainers for the first half of 2023 as well. Second half, the markets believe that we will start moving on to renewables, energy transition, etc. So coal perhaps may not have so much of a role to play. But for the next 6 months, coal pretty much could be on your radar. For the crude oil prices, when you look at the forecast, and most of the banks and brokerages by now have come out with their numbers, the most bearish of forecast has come in from Citi. $65 a barrel is what they're anticipating the crude oil prices to hit in the next year, not too far away from the 75 of a low that we saw in this year as well. EIA expects $92 a barrel. Fitch is expecting $95 a barrel. Wood Mackenzie also thinks $95 a barrel or thereabout as an average price for crude is what you could see in 2023. Almost everybody else is talking about three-digit numbers. So whether it's UBS, Enverus Intelligence, you have Bank of America talking about $100 a barrel. Morgan Stanley is talking 110. Goldman Sachs also believes that $110 a barrel is what you could see in the next year. Two factors that they are relying on is that the Chinese reopening will lead to demand coming back, and two, with Russian sanctions coming in, they will cut production, which we already have heard as well. That would also cut some supplies into the market. And by the second half of this year, of the next year, that is, you will see the heating demand, natural gas demand, and the jet fuel demand as well come back in a big number. All of those factors are expected to be supportive for crude oil prices. So there are basically very less shorts being created for crude oil prices right now. Most people believe that we are going to be trading in the higher side of the range. Thank you.